Get ready, crypto fans. Bitcoin Bulletin is kicking off with a lightning round of the biggest stories hitting the market right now. We've got futures traders making huge bets on Ethereum, while institutional money is pouring into Bitcoin ETFs. Plus, dormant Bitcoin is waking up, and we're breaking down the latest US inflation numbers that have everyone talking. You don't want to miss this. First up, we're diving deep into the massive surge in Ethereum futures volume, with traders betting big on the second largest crypto. Meanwhile, exchange-traded funds are seeing a significant rotation, with investors pulling cash from Ethereum ETFs and pouring it directly into Bitcoin ETFs. What does this mean for the market? Then, we've got a fascinating story about dormant Bitcoin waking up. Over 600,000 BTC that's been sitting idle for years is suddenly on the move. We'll explore what this massive shift in long-term holder activity could signal for Bitcoin's price and the broader market dynamics. And finally, we're dissecting the latest US Consumer Price Index report. Inflation came in hotter than expected, but how will this impact the Federal Reserve's upcoming interest rate decisions and the crypto market's next move? Stick around for all the details and more. Hit that subscribe button and ring the bell. Futures traders flock to Ethereum as ETF investors rotate to Bitcoin. Get ready for a wild ride in the crypto markets. This week, we're seeing a dramatic split in investor behavior. Futures traders are piling into Ethereum, pushing its 24-hour volume to a staggering $49.4 billion, significantly surpassing Bitcoin's $42.9 billion. This surge in speculative interest for ETH is happening at the same time that institutional investors are actively rotating capital out of spot Ethereum ETFs, which have seen outflows of $668 million over the past 10 days, and into spot Bitcoin ETFs, which have raked in a massive $1.39 billion during the same period. Experts like Stephen Gregory, founder of vTrader, point to anticipation surrounding key macroeconomic events, such as a potential half-point rate cut by the Fed, as the driving force behind this divergence. Gregory predicts that altcoins, led by Ethereum, will finish the third quarter on an uptrend, a sentiment echoed by data showing altcoins' share of total trading volume jumping to 50%. This contrasts sharply with Bitcoin's volume dominance, which has fallen to 21%. While Bitcoin ETFs are attracting new wealth managers eager to allocate capital, the futures market is clearly signaling a growing appetite for Ethereum and other altcoins. However, a deeper look into the options market, as analyzed by Adam Chu of GreeksLive, reveals a more tempered outlook with relatively low implied volatility, suggesting the market has already priced in a 25 basis point rate cut. The overall sentiment, however, remains optimistic for the fourth quarter. This dramatic capital rotation is grabbing headlines across the crypto space, with analysts and traders debating the long-term implications of Ethereum's futures surge versus Bitcoin's ETF dominance. The performance gap is already widening, with Ethereum up 31% year-to-date, outperforming Bitcoin's 19% gain. Don't go anywhere, because the market's next move could be decided by these very trends. Next, we're uncovering a massive hidden movement of Bitcoin that could shake things up. Bitcoin ETFs, what you need to know about inflows, outflows, and price moves. Exchange-traded funds, or ETFs, are a hot topic in the crypto world, but understanding their inflows and outflows can be tricky, especially when they seem to move in opposition to the underlying cryptocurrency's price. Let's break down what these metrics truly mean and why they matter. Inflows represent money entering an ETF, while outflows mean money is leaving. While these figures don't directly impact an investor's personal returns, they are crucial indicators of an ETF's popularity and the market sentiment towards specific funds. Consider the two giants in the spot Bitcoin ETF arena, the iShares Bitcoin Trust, IBIT, and the Grayscale Bitcoin Trust, GBTC. Grayscale, a veteran in the space since 2015, converted its trust to an ETF in early 2024, initially holding $28.6 billion in assets. BlackRock's iShares ETF, launched on January 11, 2024, started from scratch but has since amassed an impressive $84.2 billion in assets under management as of September 9th. The key difference? Fees. Grayscale charges a hefty 1.5% annual expense ratio, while iShares offers a competitive 0.25% with initial waivers. This significant fee difference has driven a massive migration of assets, with iShares seeing 82% asset inflows over the past year, while Grayscale's assets have shrunk by 17%. Despite both ETFs tracking Bitcoin's performance closely, with returns around 140% to 141% over the last year, investors are clearly favoring the lower-cost, BlackRock-backed iShares fund. This divergence highlights how investor preferences, driven by fees and brand recognition, can heavily influence asset flows, even when the underlying asset performance is similar. The stark contrast between iShares Bitcoin Trust's explosive growth and Grayscale Bitcoin Trust's significant outflows is a major talking point, illustrating how investor choices shape the ETF landscape. But what happens when long-dormant assets start to move? We'll tell you next. This massive Bitcoin movement could be a game changer. Dormant Bitcoin waking up. Over 600K BTC moved Onchain in weeks. Bitcoin is currently consolidating in a tight range, hovering between $115,000 and $110,000, creating a tense standoff between buyers and sellers. Despite the cautious market sentiment, upward momentum appears to be building, with buyers defending crucial support levels. Adding significant weight to a bullish outlook, top analyst Martin has revealed that a substantial amount of dormant Bitcoin, specifically 604,549 BTC held for 3 to 5 years, has recently moved on-chain. This is a massive shift, representing one of the largest movements of long-term holder assets in recent times, signaling a potential inflection point for the market. The motives behind this awakening supply are twofold and actively debated among experts. Some interpret these movements as strategic profit-taking by long-term holders who have weathered multiple market cycles and now see an opportune moment to secure gains, especially with Bitcoin nearing its previous highs. This could explain some of the recent selling pressure. Others, however, view this as a deliberate capital rotation. As Bitcoin consolidates, investors might be reallocating funds into assets like Ethereum, which is showing strong fee generation and adoption in DeFi and Layer 2 ecosystems, or other promising altcoins. This aligns with a broader trend of diversification among institutional and high-net-worth investors looking for the next growth wave beyond BTC. Regardless of the specific reason, the reawakening of this dormant supply indicates that long-term holders are actively reshaping the market, potentially setting the stage for Bitcoin's next decisive move, whether it's higher or a broader distribution across the crypto sector. The market is buzzing about this sudden activation of old Bitcoin wallets, with discussions ranging from profit-taking to strategic reallocations across the crypto space. And speaking of market moves, how are the latest economic indicators shaping up? We've got the crucial U.S. inflation numbers you need to see next. U.S. CPI rose a faster-than-expected 0.4% in August, core rate in line. Inflation in the United States for August came in hotter than anticipated, with the Consumer Price Index, CPI, rising by 0.4% month-over-month, exceeding the expected 0.3% and July's 0.2%. Year-over-year, CPI increased by 2.9%, also higher than the forecasted 2.9% and July's 2.7%. While the core CPI, which excludes volatile food and energy prices, met expectations by climbing 0.3% month-over-month and 3.1% year-over-year. The overall inflationary pressure presents a complex picture for the Federal Reserve. In the immediate aftermath of the CPI report, Bitcoin saw a slight dip of about 0.5%, moving from $114,300 to $113,700. U.S. stock index futures also gave up modest gains, and the 10-year Treasury yield dipped slightly to 4%, while gold saw a modest rise. However, tempering the negative market reaction was the simultaneous release of the weekly initial jobless claims report, which showed a significant jump to 263,000 claims, far worse than the projected 235,000. This worsening employment picture, combined with stubborn inflation, creates a challenging scenario for the Fed. Prior to these reports, markets had heavily priced in a 25 basis point rate cut at the upcoming Fed meeting. The hotter-than-expected inflation data makes a larger 50 basis point cut highly unlikely. But the weak jobs report suggests the Fed might still proceed with a cut to stimulate the economy. This mixed economic data is causing a stir, as traders try to decipher the Fed's next move and its impact on Bitcoin and the broader financial markets. That's all the news for today, but we'll be right back with a super fast recap. Don't go anywhere, we're wrapping it all up right after this. All right, let's do a quick recap. Ethereum futures are soaring while Bitcoin ETFs are seeing massive inflows. Dormant Bitcoin has woken up, signaling potential big moves ahead. And finally, US inflation is hotter than expected, complicating the Fed's next steps. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell so you never miss an update, and follow us on all our social channels. See you next time.